Hello and very warm welcome to all our incredible users, investors, and subscribers from the Golden Pi community. Very happy to share with all that now the Golden Pi community is over 12 lakh members. I'm Abhijit Roy, co-founder and CEO of Golden Pi, your trusted partner and India's leading online platform for fixed income investments. This is the 25th episode from our Industry Speak series. This is our flagship series that is dedicated to examining different market segments. So, what we do over here is we invite the top notch founders, leaders, CXOs across market segments, understand the details about a company, do a deep dive into what is their business machinery and how they're making an impact. And in doing so, our proposition is very simple. It is to provide the right set of information to all our viewers, subscribers, investors on the Golden Pi community with the right set of information so that you can make an informed investment decision. Now, today's discussion will be solely focused on a very important asset class that forms a key piece in every Indian household and portfolio, and that is gold. And the gold loan business associated with it is a very fascinating market and very dynamic one, and there's a lot to learn about it. So let's use this session to understand deeply about this market segment through the lens of a leading player in this business segment. So, the company that we are going to speak about today started under the name of Payal Holdings Private Limited, but today is known as Indel Money Limited. Ladies and gentlemen, I'm truly delighted to have with us today Mr. Umesh Mohanan, Executive Director and CEO at Indel Money. To give a brief background about Umesh, Umesh is an investment professional with more than 2 decades of rich experience in managing investment verticals. Prior to Indel, he was leading a Middle Eastern multinational, multi-billion dollar conglomerate as its executive, spearheading its complete global operations. He drove the entity's diversification across portfolios such as banking investments, infrastructure construction, oil and gas, power stations, defense supplies, manufacturing, trading of minerals, just to name a few. We also have with us today Mr. Pranav Inamdar, Director at Trust Group. Trust is acting in the capacity of a lead manager to an NCD IPO via which Indian Money is raising capital. We will get to know the details about that in the right course of time during this discussion. So, Umesh and Pranav, a very warm welcome to both of you to our discussion today.
Hello.
Thank you, Abhijit. Thank you very much.
Thank you.
I think now let's get started with this interesting discussion. I'm really looking forward to it. Let's start with some very global level macro questions around the gold loan business in general. And then we'll learn about Indian Money as a company, the financials, how is the market shaping up for you, and all those details. But first, let's understand how big is the gold loan market today in India and why is it such a significant portion of the lending market? Umesh, the first question to you.
Gold loan market in India, I think it's around 8 lakh crore plus currently. And that's the market size currently. And people are envisaging it to cross the 15 lakh crore by 28, 29, the max. And I think with the gold prices going faster, it's going to be the more near, I think 28, it's going to be. And the most interesting fact of the gold loan market is when everybody says about the size of the market, still, I always tell people, the hypothetical figure of the household gold reserve, whether it's 25,000 metric ton or 32,000 metric ton, whichever the figure is. And if you look at the 25,000 metric ton, I think only around 6.5% of the gold has come into the gold loan industry. And it's still an untapped industry, to be very precise. And even today, I think only around 37% is only covered by the organized sector, which is the banks and the NBFCs and all the other regulated entities. And still 63% is the unorganized sector. That's what I always give an answer to everybody when everybody says that there's a lot of competition and a lot of rush and a lot of players in the market. But this is the perspective what I would like to share, and this is what gold loan industry is today. And with the rising gold prices, with the monetization per gram in terms of leverage availability, with the inherent credit crunch, with slowdown on unsecured lending, and all these things happening, gold loan is always on upbeat on demand, to be very precise.
Understood. Understood. So my key takeover from there is gold loan industry is still just one third an organized industry. The remaining two third is still unorganized. So there's a huge room for growth for for large players like you. That's number one. And overall, the market cap of this industry is around $100 billion or 8 lakh crores that you said. So
Mm.
that's also already at a very significant size and with further scope for increasing massively. That's how I look at it.
True.
Now, asking a more nuanced question and a more fundamental one. So, how is a gold loan different fundamentally from that of a personal loan, right? From a very layman's perspective.
Abhijit, in a layman's perspective, I will tell you that gold loan is the fastest credit turnaround on the face of earth. And I don't think there is any credit turnaround as fast as gold loan, which you get it in a few minutes. The amount and volume what you get in a few minutes in your hand or in your respective bank account. That is something phenomenal. It's global, to be very precise. The gold is actually the fastest credit turnaround instrument globally. In India, it's been practiced at a very vast and larger scale. But in the other countries, like the other Far Eastern countries and the Western countries, it's not at a larger scale as what we practice in India. It's because the gold reserve, the household gold reserve, is quite limited in those regions.
Hmm, hmm. So to take it in proper perspective on the global scale, so India has got a very dominant gold loan market because household gold reserves are high and so can be used as a leverage. However, in the Western economies and in other developed economies, probably the household uh, gold quantums are much lower, and that's the reason why the gold loan industry might not be as large or might not be looking at as great momentum of growth as we see in our country.
See, if you look at if you look at international specific, the West has got its own pros and cons, and the East has got its own pros and cons. The
Right.
West, one of the reason the gold reserve in household is less, and the other thing is that most of the Western countries give a lot of social benefits to the population, which does not put them in such an emergency cash situation as the Asian countries do.
That's a great
Yeah.
point. Yeah, that's a great point.
And in the East, what happens is that again, since the gold holdings per household is not as high as India or China, but still they have got their unorganized sectors running. And few countries like Singapore has come up with licensed operators in gold loan,
Hmm.
and that's a start for them, and it's a good beginning from that side.
Fantastic. I think now let's start understanding the story of Indel Money. So let's know about how Indel Money started and what has been the evolution till date. In a nutshell, if you could share with us.
So we are third generation in the business, to be very precise. It was started by my granddad. We came into the financing business, which was started by my granddad in the mid 80s, and he had a stint. He had his piloting career, and he had a stint in the Middle East as an oil and gas conglomerate commercial manager and all these things. And he did come back because his family did have a lot of plantations across the Western Ghats, both on the side of Tamil Nadu and Kerala too. So they had around 1,200 domestic laborers at that point of time. And it is his understanding of last mile financial disconnect in terms of wages and labors made us start or made us foray into the finance business with state government licenses at that point of time. And it was just simple advance wage funding at that point of time. And in 2010, 2009, when he passed away, it was me and my dad who decided that we want to pursue the finance business in a more serious manner and we want to get it into an NBFC form under the Reserve Bank of India. And speaking about myself and my dad, he's an ex-banker. He's a 37 years experienced banker. He has been the trade finance head for international banks in Middle East. And as you well introduced me, I was an executive director of one of the investment houses based out of Middle East. And so we came in and we decided we're getting into the finance sector. And coincidentally, 2011, 12 was the very bad years for the gold loan companies.
Why
So
was it so?
I think that time the gold prices crashed very bad, and
I see.
the companies, even the largest of big boys, also took a big hit.
Hmm.
And we did put a lot of consultants, some of the big fours, I don't want to name them. Everybody said that you can get into anything but stay away from gold loan. So we had series of meetings with a lot of industry veterans. Everybody said that stay away from gold loan. That's the best way to do business. Now they all promoted like microfinance, which was the flavor of the season, and
Hmm.
two-wheeler loans and all these things. But we always had a thought process behind our back that it's simple. Like when everybody sits, we need to run, and when everybody run, we need to sit. That's opportunity. So it's not a gamble what we took. It's we did a very calculative exercise in understanding what went wrong with our predecessors, and we did understand to a great extent that what went wrong with our predecessors, and we said that we would come into the gold loan business with all the corrective measures in place and with the proper systematic approach, so that repetition does not happen of the history again. So
Hmm.
that is how we decided that we come into gold loan. So we wanted to start with 85 crore of our own capital at that point of time when it was just starting, and everybody said that this capital is also not required. You need to bring in 20 leverage, 20 leverage. That's how the market works. This is what they told me. So, but I personally believe that gold loan is a very unique business where you need to have not only your trust of your lender, you need to have your trust of your borrower also, because your borrower ultimately brings his sentimental valued asset, he vests it with you, and you pay him 75% of the market price. So technically,
Right.
he leaves his cash with you and go.
Yeah. Yeah.
So you need to have your borrower's trust also.
Right.
So
So,
we understood the fact that we should be giving confidence to all the people 360-degree that we would be the last ones to allow the business to fail. That's the reason why we bought in the initial capital. So that's how the journey started. And today we are around 375 plus branches operating in 15 states, 2 union territories. Our book size is around currently around 2,800 crores of plus with disbursements of around 10,000 plus crores per annum. And 92 percentage is gold loan for us of our portfolio. And currently we have a director board of 9 members where we've got four independent members. And we've got prominent people as independent directors. One is the ex-MD of LIC, who was the independent director of SBI till last year, who still serves on the SBI Life Insurance Board. One is the ex-ED of RBI, who still serves on the Banking Licensing Committee of RBI. One is the ex-MD of State Bank of India, and one is the ex-ED of IDBI and ex-CEO of AMFI. Then we've got non-executive directors, 5 numbers, out of which only 3 family members, again, 2 external. We've got one practicing chartered accountant and one administrative director. Then the 3 family members, one is my wife, who's the women representative, one is me, who is the ED CEO, and one is my dad, who is the MD, CMD to be very precise. And
understood. Understood. So basically, the business started off by your granddad in the 80s. It was more informal in nature. When the reins came to you and your dad, you decided to translate it into an NBFC model on gold lending. And you started off, like you mentioned, in 2009, 2010 as a
2000, we started actually putting shape to things in 2011. We started operations
2011.
exactly in 2012.
Understood. Understood. Great. Great. And like right now, you mentioned you have got over 725 odd branches, right?
No,
Across
375 branches.
375, my bad, 375 branches. And what are the plans for expansion, across the
So we're
country?
planning to add 100 more branches, and that would be done by Q4. And we would be filling up mainly the states of Gujarat, Madhya Pradesh, and Rajasthan, and we'll be adding a new state of West Bengal.
Understood. So these 375 branches, essentially, where are they concentrated as of now?
So we are spread across Maharashtra, Orissa, Andhra, Telangana, Karnataka, and Tamil Nadu. And we have forayed into Gujarat, Rajasthan, Madhya Pradesh, and Delhi, and of course to certain parts of UP too. So
Got
this
it.
is where we have forayed into.
Okay.
And we have understood a fact that you don't need to carpet bomb with branches. It's because gold loan business is quite different from how it was being done
Hmm.
7, 8 years before and now. Now even if the customer wants or he wants or doesn't want, he has
Yeah.
to come only two times to the branch. One is to deposit the gold, and second is to release his gold.
So, Umesh, my next question would be exactly over there. Let me double click on that particular context that you have raised around the customer. So, what is the customer segment that Indel Money is serving, and how do you acquire these customers? As in, what is the outreach model to acquire new depositors?
So as I told you, the basic ethos was communicated in the beginning of my conversation itself. So we wanted to gain the confidence of our borrowers too. So we believed in a lot of human connect, and unlike the other competitors or unlike the other players in the market, we don't believe that gold is a pull product. We believe gold loan is a push product, and this is the type of culture what we also inculcate downwards. And we also inculcate a culture of empathy and hospitality towards the customer. It's like the customer walking in needs to be treated with hospitality, and a human connect should be maintained by means of empathy. So this is one of the key features what we have in terms of the human relationship, and we ensure we have locals in all the branches.
Hmm.
We don't believe in transferring from east to west or west to north or south to north and all these things. We maintain locals in each branches, and the risk mitigation has been done by means of stringent audit and vigilance network. Because whomever I speak to, when I say that we keep all locals in branches, everybody says about the risk mitigation. So we have our risk mitigation techniques, how we are handling it. It's a very simple psyche that if we have two kirana shops next to our house, one run by our villager and one run by somebody from 3 states away, you would always love to go to the shop which is run by a villager of yours.
Hmm. Right.
The simple concept, there's no rocket science in it. So that's the human bit of it. And the other thing is that the product designing, how we do it is that we design all our products in and around our customers. And
Can you give
we
some
design our
details about these products,
so we
some of these interesting products that you would have designed around the
so
customer needs?
we were the first ones to come up with the 12-month gold loan scheme. We don't have 3 months, 6 months, 9 months in our books as it is. We have only 12-month gold loan scheme. And initially, there were a lot of hue and cry when we came out with the 12-month gold loan scheme. Now, I could see that most of the competitors or even larger boys have got only 12-month schemes with them. And we bought the 12-month schemes, and something which we do in stark contrast to what our competitors don't do is that we do a hand holding exercise for the customer, and we make them understand the pros of remitting monthly interest. Why is that? Because we take them to throughout the life cycle of that particular tenure of the loan, and we take him to the end of the tenure of the loan. And if at the end of the month, if he is not able to pay back the interest, he has to bring back the interest and the principal of that particular loan for 1 month interest and the principal. And once he releases it, we ourselves can arrange a repledge for him. So that means that his net cash outflow will be lesser in comparison to a competitor who actually promotes a bullet payment of interest and principal together at the end of the tenure.
Hmm.
So there are pros and cons to it. The cons to it is that we might be 50 pips or 75 pips in lesser in ROI in comparison to our competitor. But the pros, what we have is that we have a longer tenure relationship with the customer.
Got it.
So that is one. And the other thing is that when the whole world was running behind the doorstep gold loan, we came up with our hybrid gold loans.
So
And
what is this hybrid gold loan? If
so
you
it's like the story started in 2019 when I came in as a CEO of the organization. So when I came in as a CEO of the organization, everybody used to tell me the story of the largest online gold loan company in India and its valuation metrics and all these things. So I come from a school where I believe in tangibility in bottom line. So I thought that okay, I did have a bit of a FOMO at that point of time when everybody told me this. So I thought of running a pilot project in Hyderabad and Bangalore. And to my discovery, I found out that that model can never be financially viable of having a separate vertical running an online or a doorstep gold loan system. I think later on, the balance sheets of the existing companies are testimonial to my findings at that point of time. And what we did is that we launched the hybrid gold loan. Again, when we launched the hybrid gold loan, also there were a lot of interactions with the customers. So I make it a point that 2 months a year, like mostly April and May in a year, I touch base with most of the branches. I drive around, I interact with customers and all these things. So in my similar drives, I interact with customers, and I could understand there was a bit of a reluctance from the rural and semi-urban customers where one problem they had is that we give a call to the call center, somebody comes, picks up our gold, gives 75% in cash, takes it and goes away. We don't know where he goes, where it's been stored, nothing. And second is that every common Indian family has got uh, a festival a year or a family marriage a year where they would like to display all the gold. There's a lot of female pride and there's a lot of male
right.
chauvinism also involved into it. I'm talking about the rural and semi-urban sector. I don't
Yes.
think the
Yes.
tier one centers can connect to that emotion, to be very
Mm.
precise. And there's a lot of pride and chauvinism, male chauvinism involved into it, saying that I have inherited so much, or I have got through marriage so much, I have added so much, and all these things.
Hmm.
So in those scenarios, maybe today afternoon is the function, today morning they get the cash, and afternoon they need to display the gold. So what is the ambiguity which is prevailing with everybody was that if it's an doorstep gold loan, you need to remit it online and the delivery would happen in 24 hours. So there's a lot of anxiety and ambiguity in this sort of transaction.
Hmm.
So one side, we had the non-viability of financials in this operation. The other
Hmm.
side, we had a bit of a customer reluctance because we as an organization, we are more spread on the tier 2, tier 3, and tier 4 centers.
Understood.
So we thought that let's build the hybrid gold loan system,
Hmm.
which basically instead of having a vertical, it's going to be a extension, perpendicular extension of our existing branches with the loan onboarding software, the kit, the extra staff, and all these things, giving them a bigger radius to operate. And on the other side, the customer gets an option to either come to the branch and pledge, sit at home and pledge, or come to the branch and release, or sit at home and release, where all whatever combination he can choose. The
That is the
combination is
hybrid nature of this loan,
yeah,
basically.
the
The
combination
nature
is
of
left to him.
interaction with Intel money, that is hybrid, either
Exactly.
digitally or physically.
Yes. So that means that
Understood.
see, let's imagine, let's take a real case scenario. Somebody wants to sit at home and pledge, and next week he's got a marriage and he wants a release today morning. He can transfer the amount because when the gold is being collected from his house and my staff leaves his house, the customer gets a message confirming that your gold is being vested in so and so branch of Indel Money. A release can be done online, or you can come physically for a release at this particular point. This sort of confirmation we give.
Understood. Understood. So that's a very interesting concept. So what I understood about the uniqueness of the Indel Money's business model is one very interesting set of products. The 12-month loan that you mentioned. I have normally seen other lenders, gold loan companies lending for nothing, more than 6 to 7 months. very short duration loans. But here, this is like a full 1 year, so it's
Yeah,
easier for the
Abhijit,
customer to
the
pay
whole
back
thing is
also.
that see, everybody who comes to keep a pledge comes with the mindset that his pledge will be released in 30 days to 45 days. But 80% of them are not able to do that. So
Hmm.
majority of them come for the lower scheme, which is 3 months, or some of them take 4 months and all these things.
Hmm.
But it never, many 80% of them cannot release that pledge during that time. Here,
That is a statistical data that
yeah, yeah. So
will not
here,
be able to repay
here,
back in full.
here, what we give is that we are giving them a solace
Hmm.
that you can hold on to your sentimental valued asset by just remitting interest. So
Right,
that's the fallback mechanism what we're giving.
right.
All said and done, although we give 12 months loan, since I told about the average Indian family psyche, the average life cycle of each loan is around 8 to 9 months. So what happens is that it gets released today and tomorrow it gets repledged. It's a fresh pledge for us.
Yeah, yeah. There's the
But at the
same
back,
asset
yeah,
on
yeah,
which the loan can rotate. Yeah.
exactly.
And what would be the typical ticket size of these loans
So
that you would be offering to the
we
customers?
deal with an average of 65 to 75,000 rupees.
65 to 75,000 rupees.
Yes.
Interesting. Understood. Cool. If I move on to the next leg of the conversation, a more deep dive into this business model, what is the underwriting approach that you follow for these gold loans? As in, I understand the LTV that you are having over here is 75%, and that's what you mentioned. And what are the remargining rules also that you're following in this overall operations?
So in terms of LTV, the new rules become applicable from next year, April 1st onwards. So currently we give a flat on LTV 75 percentage, and the new calculation is up to 85 percentage of
The
LTV,
RBI guidelines which have come.
yeah, the RBI guidelines, which includes the interest too. So
Right.
that is how it's been done. So, but that's going to be effective only next year onwards.
Would you switch to that, like from 75 to 85?
Yeah, we have been forced to do it, so we'll be switching it by the 1st of April next financial year.
Got it.
We have been left with no choice actually.
And how do you look at, it impacting your P&L? Is it a
Abhijit,
positive thing?
the best part is that with the new guidelines, a level playing field has been created. You know, before
Great.
I always felt that the banks had their advantage
Hmm. Hmm.
to their side. Now, what has happened is that there is a level playing field being created, and that's a welcome move from RBI.
Right.
And 85% of the new guidelines we are already complied, to be very precise. I think I should thank the independent directorship's mentorship, which they have been handling us. So we just had a retired independent director who was the ex-principal CG of RBI, who still continues on our board as an advisor to the board.
Right.
And we have got an ex-ED of RBI also
Hmm.
on our independent director board. So their mentorship has played a lot in helping us, or rather making us fit and fine enough to weather all these tides, to be very precise. Like since last 2, 3 years, whatever regulatory shocks were coming in, we were
Hmm.
quite insulated from it because we were all prepared and we were quite proactive with the regulator.
Hmm.
So that mentorship plays a lot of role over there.
Understood. So, if I just narrow down on this, let's say a single example of a gold loan that is being given from Indel, right? Just to understand the business model well. So, say somebody has taken a gold loan, has pledged his gold and has taken a gold loan. Now he has to pay the interest. What were the ways in which Indel would give reminders to the customer? If the customer wants a top up on that, right? Are there possibilities over there? Right? And let's say somebody eventually is not able to pay back, right? For any reason, there would be people who, would not be eventually be able to pay back. Then how would the auction process be? I mean, what is it over there as the end of that gold loan that you would have on your books? So if you could,
So in
share some
terms of,
points on this.
I'll start with the ease and convenience. As I said
Sure.
earlier, even if the customer wants to come to the branch, also he needs to come only 2 times. One is to
Right.
deposit his gold, and second is to retrieve his gold. If he uses the hybrid option, he can come for none, to be very precise. the choices to him to be very clear.
Right.
And he and he gets he gets all digital traction, to be very precise, to pay interests online, to make part payments online. And similar to interest and part payments being made online, he has got also the option of doing top-ups online.
Hmm.
So he can sit at any part of the world at any point of time, at any hour, actually, he can get his top-up done.
Hmm.
So that's how we have created the digital traction, to be very precise. So more than digital, we like to call it more of phygital,
Hmm.
because we have given it a physical touch for our digital traction. So that,
Hmm.
as I told you, this business is something which works on a lot of trust factor. So
Hmm.
when you go completely digital, that trust factor gets diluted a lot. So
Hmm.
in order to maintain that trust factor and touch and feel, we have made it more of digital. So all these activities, as I said, can completely done digital, and even top-ups can be done. Everything is at his fingertips. And we have made our apps more interface friendly, where common people can activate it. It is not as complicated as certain modern bank apps which is available today.
Hmm.
We run just with simple apps. And in terms of auction, for us, auction is the last option, to be very precise.
Hmm.
Unlike many other competitors, we don't give priority for auction. We do auction as per the norms prescribed, but it is the last option because we believe in something. Once auction once done means is a customer lost.
Right.
Okay, so our auction trigger points are: one is DPD 90 days, and the other trigger point is whenever there is an M2M breach, where there's a mark-to-market breach of 90 percentage of the current metal price against the total outstanding loan. We
Hmm.
make a margin call, and by the time it reaches 95 percentage, we proceed for auction.
Understood. Understood. So, one quick question over here, in this overall thing, how are you ensuring the quality of the gold deposits that's coming in? Do you use some, spectrometer or other things, the latest technologies, or is it a physical verification? How do you ensure the quality of the gold that comes in?
Abhijit, whatever technology we use these days, I always tell, even the industry stalwarts, I tell them this, you go to Tanishq today to exchange your gold. I don't know whether you have done it, but you should try it and you should verify what I'm saying is correct or wrong. So you give your old gold to them, they will take it and they'll put it in the carat analyzing machine and all these in the
Hmm.
modern machines, and they come back to you and saying that this is the estimate what you will get for your ornament. Now you pick your new ornament against it. When you pick your new ornament before billing, they're going to tell you one thing: we need to melt it
Hmm.
to give you the final figure and final approval. Are you
Hmm.
okay to melt it? So
Hmm.
they take a consent from you to melt your ornament which you have given for exchange. Then again they recalculate the gold rate and come back to you.
Hmm.
So what I'm coming to the fact is that even the modern of carat analyzing machines and everything, if you have 3 or 4 of coating, it cannot be analyzed. So
Right.
there you need a lot of expertise, where the things like pin test, acid test, drop test, and all these things that comes with a lot of expertise.
So
So
you
for us,
hire
our
people with those expertise actually
yeah,
to do the validation of the
yeah.
gold quality.
So we have got a simple structure, like we have got a AM BM plus CRE, and it goes up to AM BM plus 5 CREs and all these things. But we
What
ensure
is
the
this? If you could explain, what is this
it's so
AMCRE?
it's a branch manager and assistant manager, then
Okay.
the customer relationship executives. So when it's a 3 crore AUM branch, we'll have one customer relationship executive. When it is 5 crore, we'll have two customer relationship executive. When it is 7 crore above, we'll have two assistant managers and two customer relation. And 7 crore above, we'll have three customer relation, two AMs and one BM. So we
Understood.
ensure that the branch managers and assistant managers come from an NBFC, gold loan NBFC background, number
Hmm.
one. So they have their basic knowledge of gold appraisal, where they become the joint custodian in the branch also.
Right.
And once they are getting inducted into Indal Money, there is a very rigorous appraisal training done during the induction training itself. So our appraisal training in the induction is not done by the learning and development department, which is under the HR. It is
Hmm.
rather done by the internal audit department where we have got actual goldsmiths which are a part of the internal audit department.
Hmm.
So they do this training exercise, and there is an updation of the appraisal training exercise happening once in every 45 days. So there is a physical updation of appraisal training. So
Okay.
in that training, what they give is that they give the details of new type of design ornaments which has come into the market,
Hmm.
the new type of spurious ornaments which are circulating in the particular
I see.
market.
Hmm.
So all these things we keep in tab. So in terms of process, once the ornament comes into the branch, the BM and the ABM jointly inspects it, appraises it, and once the appraisal has been done, the ornament moves into a four-lock tamper-proof cover. And four-lock tamper-proof cover, the first lock will be used by the branch people to deposit the gold into the cover. Then the post-disbursement, there are three detailed audits happening on the detailed appraisal audit happening on the same gold using the three pending locks on the same cover.
Hmm.
So which will happen within 15 days and different teams will be coming in. And once that three detailed appraisal audits are finished, then onwards, the tire weight will be compared with the photographs available in the system with the ornaments which is shown at one side of the transparent cover.
Hmm.
And they will compare the tire weight along with the barcode systems and everything. So this is how we ensure the quality of gold and ensure that it is safe and sound in the custody.
And where did you store this gold?
So
What
we have
security around storing?
vaults. We have our own vaults in every branch.
Got it.
So our all vaults are like 12-hour gas cutter and 12-hour drill resist. And apart from that, we have got security systems, we have got CCTV systems, we have got motion detector systems, we have got alarm escalation system, which escalates to different levels, including the police station.
Right.
And these are all connected to a central command center of our corporate office. So which is manned 24/7, 365 days. And these are all headed by ex-service people to be precise.
So there's a lot of security which is built
Yes.
in on storing and protecting the gold. Got
And
it.
on top of that, we have an insurance updation which happens every day. And
That's a very
so
important.
I always tell my friends, actually, so keeping a 1 rupee gold, 1 rupee gold loan with an NBFC is more safer than storing your gold in a bank locker.
True. Because NBFC is storing it in a thousand times safer way, say,
No, actually, so what's
well-guarded way.
happening is that your ornament is completely covered by insurance, whereas your
Right.
the bank coverage is only 1,000 times of the rent what you're paying.
Understood. Understood. That's a new point, I don't
So
think people
we
would be
have
aware.
we have the scheme of free storage facility also. We just create a 1 rupee loan and we give free storage facility for people. So the best part is
It's like
that
a locker
the
system which
yeah,
customers
yeah. So the
can.
best part is that the ornament has been captured in the system, the photographs have been captured, and it comes a part of the insurance
Hmm.
thing. If something happens, also it's a complete coverage.
I think that's a great feature, which I think definitely is a clear differentiator from what a bank would do.
True, true.
Moving on, now let's try and understand about the financials of the company. That would be a very interesting thing to understand. So, first question is, what has been the AUM growth of Indel in the past 3 years? If you can share that with us.
So we have grown. I think last year we have grown around 45 percentage. The year before that, we have grown 73 percentage. The year before that, we have grown 53 percentage. This is how we have been growing.
What is the latest AUM? What is the loan book size at your end?
So the latest at Q1, we have closed it at 2,554, and currently we are around 2,800.
2,800 crores a year. Understood.
That's as of current.
That's as of current. And if I just look a little deep into this AUM, does this consist only of gold loans, or you have got other loan products also that Intel Money would give?
So the we 92 percentage of our this thing is gold loan. So the other
Understood.
products what we have is basically like we have MSME property loans, we have digital personal loans, and all these things. So
Hmm.
why we do that is actually basically for we call it proof of concept.
Hmm.
because we operate we means we in India we operate in a such a volatile condition that tomorrow we don't know what rules and regulations will be
Hmm.
coming up. Maybe tomorrow something happens and the regulator says no more gold loan from day after tomorrow onwards or
Hmm.
something like that. We should be prepared for the bad days. So
Hmm.
that is one of the reason why we keep the proof of concept ready. It's like different products ready under our sleeve. And on top of that, since we are interacting with a lot of PE investors now, everybody has got a concern that we are a one product company and we don't have any other products ready. So we wanted to show everybody that we have a proof of concept completely
Hmm.
ready. But all said and above, the board mandate is basically to run it as a gold loan company till we go hit an IPO.
Hmm.
So basically, we'll be 90% plus gold loan itself
Hmm.
till we hit an IPO. So that's the mandate of the board, which I have with me now.
So I think that's a great piece of information, for anybody, viewing this video, that definitely IPO is on the cards for the company.
Yes.
That's a fantastic news. Now let's understand a little bit about the PAT of the company. Maybe what has been the last financial year's PAT level?
So last financial year's approximate PBT has been around 60.6 crores, and we have clocked Q1 at 31.91 crores, and as of 31st of August, we have already reached 54.85 crores of PBT.
Got it. Got it. So this year, definitely you're looking at 120 crore plus PBT. This current financial year of FY26.
We have projected only 90 crores of PAT.
Got it. But PBT would be more than that, right? It would be in the
Yeah,
range.
PBT would be more than that.
Because if you have done 30 crores in the first quarter of the year, just doing a simple, extrapolation for 4 quarters, it comes to PBT comes to 120. But yeah,
PBT
that would definitely be on the lower side. 90 crores. Great. And what would be the NPA levels? That's an important marker for any company. But I believe a gold loan company would have very, very low
Our NPA is hardly around
in reality.
1.03 something.
Right, right. That's pretty much on the lower side, right? And though it is an NPA which is like that shows up technically, in reality, as because you would be lending at 75% LTV post auction, definitely that's covered pretty well.
Abhijit, I tell everybody that see one of the biggest problem with the gold loan NPA is that it's an NPA today and tomorrow it wouldn't be there because I have certain auction processes and procedures to be
Right,
followed as per the regulations.
right,
So which they're quite stringent. So
right.
certain NPA pop-ups would happen, but
Hmm.
we have been consistently being in and around one since couple of since last two last since last financial year we've been in and around one. We had a spike at FY23 and 24,
Hmm.
and we brought it in control in by the third quarter, fourth quarter of FY24 itself.
Hmm. Great, great. So, just to summarize, what I understood is currently the loan book size would be around 2,800 crores as of date, out of which the composition 92% would be gold loans, and the remaining would consist of MSME loans, property loans, and digital personal loans, like you mentioned. But they're
Yes.
mainly in the proof of concept way. In case the business needs to foray into a new kind of lending operations, you are already ready on day zero itself. In case there are regulatory changes, so business is already well hedged against any kind of regulatory risk that can come in. And the PBT for the last year mentioned, I think, was around 60.6 crores. And this year, probably you're targeting around 90 crores of PAT. And the
Yes,
NPA levels at around 1%. Great,
exactly.
great. Now, coming to the next interesting point, which everybody becomes very curious about is, can you share with us some of the key RBI regulations that govern the gold loan business in our country? Maybe one or two. You're free to add the third one as well. And how are you adhering to those, regulations?
So one of the major regulation what RBI is concerned about is the auction process. So transparency in auction process is something very important. what they require. So we've been following an online auction process using RBI approved online auctioneers so that we have everything transparent and online itself. But with the new guidelines, RBI said that we should give a try for physical auction at the branch level. Then, if a failure, you can move it to the district headquarters level and do an online auction. And not only the auctioning process, the distribution of the surplus back to the customer is also something which RBI keenly follows. So this is one of the RBI's keen follow-up on things. You know. And the other stringent thing what RBI is really concerned about is the LTV portion actually.
Hmm.
So RBI recently has found that many of the companies are circumventing the LTV uh, parameters set by the RBI, and for so many reasons, there were a lot of media write-ups also in relation to
Hmm.
that and in relation to
Yes.
RBI actions. So these are the two key points which RBI is very keen on. One is the LTV portion, and the other is the auction process. So these are the main key points which they always emphasize. Whenever an RBI audit happens, these are the 2 points they emphasize on.
Got it. So one is basically.
When the LTV, again, when I say the LTV, it's again related to the auction process because
Hmm.
the retrieval value of the metal and what is the settlement, all these happening,
Hmm.
this all relates to LTV because technically they can only give 75% of the LTV.
Right.
And when you cross 75% of the LTV playing with the purity or weight or something like that, and if you don't have that realization during auction, again there is a mismatch and you will be forced to respond to the RBI towards their queries.
Right. Right.
So it's like a double-edged sword.
Hmm.
So these are the
Understood.
key. So these are the real key points what they're always focused on. And we as an organization, as I said, we keep our auction process itself as much as transparent as possible. And we love to do the business by the rule of the land because we all would like to live peacefully. And on top of that, we are quite proactive with the Reserve Bank of India. We interact once in a quarter. We always apprise them on our position on the developments and the new products and new tweakings and all whatever we do.
Is that also regulatory norm that an
It is
agency
not
has
a norm
to?
actually. We proactively do it to be very precise.
So it's a good behavior on your part
Yeah.
to be transparent with RBI
So
upfront and
that's
the
so that's what I
products
said.
that you're
That's the
experimenting.
that's the pedigree of the mentorship what we have got.
Hmm. Hmm.
So that we are quite blessed and lucky to have those pedigree of mentorships on us. So we are practicing that. And this has allowed us a lot of things, like we are the second company in the country to get a straight 82 license on our NBFC itself. Most of them try get it on their subsidiaries or other companies because they don't want to be susceptible to a scrutiny. So we were
Hmm.
quite confident that we were open to a scrutiny. And after that, we had three detailed RBI audits, three SNAP audits, everything. So we had no major issues, to be very precise.
So 82 licenses under Indel Money, Indel
82,
Money Limited.
82,
80
80,
licenses.
82, 82.
82 RBI licenses under Indel Money Limited. Wow. That's a lot of license, lot of
Not
IP
82,
license.
I meant 82.
82.
Authorized dealer 2. It's a foreign
82.
exchange
82.
license.
Okay. Okay. 82. Understood.
82
Understood.
license. Authorized foreign exchange. Authorized dealer for foreign exchange.
Understood. Understood.
So we have got tie-ups with at least 49 or 52 of the India government outfits itself, including Export Promotion Council, sports teams, and all these things. We
Hmm.
support them a lot for their international activities.
Hmm.
On top of that, we have got around 150 private companies enrolled with a lot of export activities involved.
Hmm.
We have got around 96 universities, international universities enrolled with us for
Hmm.
direct payments and all these things. So we have got a good traction on that aspect also.
So I think now let's segue a little bit into a very important aspect, and that is funding about the business, right? So cash or capital is the raw material for any NBC. How are you funding your growth? Like, what are the various sources from which you're raising capital and you're scaling up? and
So
many mix over there.
equity till now it's completely done by the holding company, which is basically Indel Corporation, which is the family company of ours. So till today they have been funding the equity.
Hmm.
And
So
as a
Indel
right,
Corporation is a, I'll just, for clarity of our viewers, Indel Corporation is a parent entity under which we have Indel Money Limited, which is the gold loan NBFC company.
yes, exactly.
Understood, understood.
So I'll give you a bit of elaborate on Indel Corporation. Indel Corporation is the family-owned company where
Mm-hmm.
the flagship subsidiary is Indel Money.
Mm-hmm.
And apart from that, they are also into other businesses. They are into automotive distribution and service networks. So they're dealers for Toyota, they're dealers for Volvo cars, Honda cars, Suzuki motorcycles, Yamaha motorcycles, couple of EVs. They run the largest service network for Ford cars in India. They've got Ashok Leyland buses, trucks and buses, service networks for Karnataka, Kerala, these things. And apart from that, the other business which Indel Corporation is into is they've got a hospitality arm where they run a 5-star, a 4-star, two, 3 stars, one boutique hotel, one resort, and all these things. And there's a commercial real estate development arm. There's an insurance brokerage arm, which
Mm-hmm.
which has been headed by one of the ex-PSU members. And we have got a digital media arm. So apart from all of, we are into plantations too. And apart from that, Indel Corporation sits on legacy assets of approximately 1,800 2,000 crores of hard assets, which is
Mm-hmm.
basically land and properties.
Mm-hmm.
So that's what the holding company is, which is completely held by our family trust.
Mm-hmm.
So till now, Indel Corporation is funding it till today. And I have convinced the family, although as a family, we are in a position to support the company till it goes IPO, where we have put the IPO date at 29. Now I have convinced the family that we need to do at least 2 rounds of P for two purposes. One is for a valuation purpose, and second is for a tick box on governance.
Mm-hmm.
Although, although there have been companies going belly up, having multiple Ps on board, but still I feel it's a tick box on governance part. So for that aspect, we have appointed our investment banker, which is Lincoln International, and we are in discussions with few of the investors. We might close in soon, and maybe within 6 7 months, we'll have somebody on board.
Understood. From any one
So,
of the large PE firms.
yeah, so till that point of time, whatever the requirement is, it will be coming from the holding company itself. So that's the equity portion.
Right.
And the debt portion, we have been always vibrant enough to keep in different verticals, rather not having all the eggs in one basket. So
Mm-hmm.
we have our traditional dependency lines on CC loan, CC term loan, CC lines and term loans by banks. So we had the DA structure, we had the PTC structure, we had the MLDs, we had the institutional NCDs, private NCDs. We had the co-lending lines. We recently just opened the mutual fund lines. We've got HDFC, one of India's largest mutual fund, investing on a 5-year term with us. So this is a recent breakthrough, what we had done. And when I said co-lending, I would like to let you know we are the first company to do the conventional gold loan co-lending in India. We started with the pilot project of 25 crores. Today, combined, we run a line of around 1,250 crores.
And who are the co-lenders with you over here
So we
with your
have
company?
currently DCB and IndusInd Bank along with us.
Understood.
And we're signing up with one large NBFC and one of the PSU banks also now for another 800 crores of limit.
Understood. Understood.
So we've been like vibrant enough to keep different verticals of debt funding. So like for classic example, 2 years before we had more of PTC transactions. When RBI pushed the conditions on PTC, then we were easily able to shift to the DA.
Hmm.
We had a lot of MLD transactions. When the budget killed the MLD, we were able to push into the private NCD and institutional NCD market. And similarly, like last year, when the first quarter, when the RBI said that banks to stop lending to the NBFC or rather slow down the lending to NBFC, we were completely dependent on the PSU banks till the first quarter of last financial year. We put full throttle inside the private NCD placement market, where
Hmm.
we had a traction of yearly around 50 crores. But last financial year, we raised around 1,000 crores through that market. And even with the funding slowdown, we were able to grow 53% in book value. So that strategy of us keeping our varied verticals is like we need to pedal. As I earlier said, we operate in a land of a lot of volatility.
Right.
So we have to keep our pack of cards ready and
Right.
what to use when.
Great. So, I think now I will divert my question to Pranav uh, to share that Trust is the lead manager to the NCD IPO issue through which Indel is raising money, right? So,
Yep.
can you share with us, what was your thesis on Indel money that helped you build the confidence? What is the structure of this NCD IPO with respect to the volume being raised? What are the tenors, what are the interest rates that investors should look forward to? Those details, if you can share, please share with us.
As you are aware that our meeting with Indel management went off so well that we got interested in doing as lead managers to their. We were very keen, in fact, looking forward to getting associated with the group as lead managers for their upcoming debt IPO. I'll just briefly tell you, run you through the IPO details. It is Indel Money Limited is coming out with a public issue of secured, redeemable, non-convertible debentures of face value 1,000 each for an amount of 150 crores plus an option to retain another 150 crores. It is rated IVR A minus stable by Infomerics. It has a security cover of 1x and the face value, as I said, of bond is 1,000 with a minimum subscription of 10 NCDs, which is 10,000, and then multiples of 1,000. Lead managers is Trust Investment Advisors is the lead manager, and Infomerics is a credit rating agency, and debenture trustee is Catalyst, and registrar is MUFG in time. Other than that, what I want to highlight is the structure part is that it is coming out with a very, very investor-friendly structure wherein you have an option to go for 366 days, 24 months, 36 months, 60 months, and 72 months. So across the spectrum, in 366 days, as well as the 2 year, 3 year, and every will have a monthly option or a cumulative option. The coupons will start for 9% for 366 days, 9.75 for 24 months, 10 quarter for 36 months, and 11 quarter for 60 months. Whereas the 72 months structure will have a cumulative 12.25% yield on it, which is very, very effective. And these days you don't get many cumulative options. So yes, and there will be an allocation ratio of 20%, 20%, and 20%, and 30 and 30 for the institutional, non-institutional, HNI, and retail investor. Retail investor will be individual or an HUF applying not more than 10 lakhs on an aggregate basis. And the issue is opening on the 13th of October and closing on 28th of October with an option to close the issue earlier with prior notice. So once again, we will be looking forward to a very positive feedback and positive subscription from the Golden Pie family, and also with the given confidence, I am expecting a very, very with growing confidence with such a wonderful webinar, and we are expecting a good turnout on the from 13th onwards.
So, as public issue, as I've told all the verticals, public issue is one of our debt capital vertical, and traditionally we have been doing only one public issue a year, unlike the other competitors who do quarter by quarter.
Mhm.
Since we have got multiple verticals and multiple option, we
Mhm.
do only once a year. And this time we are doing our largest issue, which is 300 crore. We are doing 150 plus 150.
Mhm.
And this time, as we're doing a larger issue, we've got one of the largest player also along with us, which is Trust Global.
Right.
And we feel privileged enough to be partnering with them.
Right.
We look forward to get a great success with this partnership. And as rightly said, we'll be adhering to the SEBI norms in terms of the
Right.
investment of this particular amount. So
Right.
basically, it's going to be for further lending and capital expenditures and all these things and repayments and all these
Right.
things together. So this is what it is. And I think the issue is opening on this 13th, coming Monday. And we look forward to the support from all.
Yeah.
And we look forward to a continued patronage by each and everyone who's been supporting us all these years.
Yeah, I think it's a great story for all our viewers. Umesh Mohanan, Executive Director and CEO at Indel Money, shared a beautiful landscape of the entire business at Indel Money, how it has actually metamorphosed over the years, right? With 2,800 crores AUM as we speak, right? 375 branches across the country, and looking forward to 100 more branches addition in the next 1 or 2 quarters, right? Rapid scale of business growth. um, Indel Money is raising capital to the tune of 300 crores through NCD IPO issue, of which 150 crores is through the base issue size and 150 crores on the green shoe option. We will hear details about it from Pranav, who's a part of the Trust Group, and Trust is a lead manager to this NCD IPO issue. Ladies and gentlemen, I think we had a great learning about the industry and learning about Indel Money as a company, how it has evolved over the years into a truly wonderful enterprise. Thank you, Umesh, for taking out
Thank
your
you.
time and sharing with us all those learnings that you have, learned over the years, right, with us. It was an interesting discussion, and wish you all the very best for this NCD IPO issue.
Thank you, Abhijit, and the pleasure has all been mine. Thank you.
Thank you. And a big thanks to our viewers as well. Yeah, keep watching out the space for more such interesting episodes. Thank you, everybody.
Thank you.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.